Hi everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hansack Markets for Monday the 14th of July. The European markets have opened pretty strongly actually, and that's come after a weekend where the markets have calmed down significantly on this fear of contagion from the Banco Espirito Santo. Um, and that's also been helped by a slight corporate restructuring as well at the bank, and it just seems as though that risk appetite is fairly positive actually once again coming into the new week. You've got the euro that's rallying, you've got gold that's sharply lower, and stock markets higher. So I think just across the board a general sense of more further optimism in these markets as we start the new week. Asian session was fairly positive as well overnight, and also if you look at the forex trading, dollar yen, which I believe is a key gauge for risk in this market. Dollar yen is trading higher again, and it also prevented closing below 101.30, which I think is a key gauge as well for this. So a decent start to the trading in the European session today. Dollar index not doing a great deal today, just slightly lower, but generally I think that's due to the fact that the euro is trading 0.2% higher today. There's not a great deal of economic data out today, just the eurozone industrial production that comes out at 10 o'clock today. 0.5% expected there, but that's not a huge number for the market to be focusing on. There's significantly more important data throughout the week. And also Janet Yellen's testimony to the Houses of Congress through Tuesday and Wednesday as well this week. So quite a lot going on that we need to be focusing on rather than the data today. In terms of my chart of the day, I'm going to be looking at the S&P 500. And if you just compare the S&P 500 to the likes of the DAX and the FTSE, the S&P 500 is well above its primary uptrend. DAX and FTSE have both tested their primary uptrends. This is the primary uptrend here, this blue dotted line, and it's well above that line, about 2.5% above, and it's still forming support at this 21-day moving average, which just suggests further higher lows in place, and there's no real blip that's really been seen. It's just a continuation of these stepped gains, finding support nicely around the old breakout of 1960, and pushing seems to be finding support. And you can imagine with the outlook of today fairly positive in the European session, the S&P 500 could well see some decent gains early doors. You need to be finding, I think, support, which is support around 1952, which was Friday's low, and above 1945 as well. That 1945 level is now the key low, because that is the latest reaction low before this correction. So that is the low that we need to be looking out for, 1945. If that can stay intact, which it looks like it will be, then the outlook certainly remains positive for the S&P. There's a load of banking stocks in the S&P 500 reporting earnings this week, from Goldman's, JP Morgan, and Citigroup, to name but three. So that is going to be dominating proceedings this week for the S&P 500, but for the technicals, certainly you would be saying that the momentum indicators are all in bullish configuration. RSI nicely supporting above 50. MACD lines as well positive, stochastics also positive, so very good setup pretty much across the board on the S&P 500, which is not really something that you can say for the FTSE or the DAX at the moment, but certainly it looks positive, and ultimately you probably would be looking at a retest of that 1986 high on the S&P 500. Anyway, I wish you good luck in your trading on S&P today, and I will speak to you later. Thank you.